All right, well, thank you all for joining the call today. I know it's a hot one out there right now. It's going to be perfect for the beach right after this. So let's get going. All right, this is called we call the road to home. We're going to go over the top reasons to own a home, the home buying kickoff process, why a pre-approval matters, the different types of loans that are available out there and different programs. We're going to go over the 10 rules in lending, a little bit about today's market and what we're looking at, how much you will need to purchase that home. We have the journey to home ownership, which is my favorite slide, and that's where we go over the process from start to finish. That's a really good one. And then at the very end, we're going to have a Q&A if you have any questions, and there's a couple times throughout the call where you can unmute yourself if you'd like or throw it in the chat and we can answer some of those questions. All right, a little bit about us. My name is David Sanchez. I am a full-time realtor. I've been selling real estate for a little over 8 years now, and I live in Long Beach, focus in LA and the OC area, but also work in some other areas as well. Like I have a listing in Ventura right now, but different areas. So know that I've been doing this for 8 years and this is my full-time thing, and I love it. And then Kimberly.
Hi, my name is Kimberly. I live here in Long Beach as well, originally from Texas, lived in New York City for a little bit. I've been selling real estate for a little under 6 years now. And again, I'm pretty passionate about it as well.
My name is Kirk Salen. I'm a mortgage lender. I work for the largest mortgage lender in the United States, Nexa Mortgage, and we'll go into a little bit about the benefits of that in a few minutes.
Perfect. Thank you. All right, well, let's kick it off. Oh, before that, this is something that we just added recently. So anyone that is on the call today, and if you want to stick around till the end, we'll show you how to submit for that. But we're going to be providing $1,400 in perks for anyone that's on the call. We talked to Kirk. You can choose whoever you want to work with, but we do want to work. This is a lender that's a good lender, and we want to make sure that we want him to. He's going to take care of a few things. One of them is the $700 credit towards the appraisal. That's something that Kimberly will talk about, and we do need to. There's an appraisal you got to pay for, but in this case, Kirk is gonna take the bill on that one, and then Kimberly and I are gonna cover a home warranty. We try to get the seller to pay for it, but if they don't pay for it, then we'll pay up to $700 towards that home warranty. So stick around and we can lock that in. Now, Kimberly, if you could take it away.
Yes. So I'm sure everyone here, when they decided to join this call, had a different reason that they wanted to purchase a home. But we've found that for most people, even though reasons differ, there are about 5 reasons that are universal for everyone. And the top two here, equity and appreciation, they pretty much go together. But equity is the opportunity to build more money, like a built-in savings account over time. So it's the amount you owe versus how much it's worth. And that we're hoping that changes as the longer that you own the home. And that's due to not only you paying down your loan and your balance, but appreciation. We hope that over the years the home will appreciate in value. And then when it comes time to sell, that you can make a profit. The other great thing about owning a home is that you get a lot of tax benefits. Now, I'm not a CPA, so I'm not going to go into detail on that, but we do have another webinar that we offer throughout the year with the CPA that goes over some of those really good benefits. And then we have upgrades, and that's tied into appreciation and equity as well. When you're renting or you're living with, a family member, you can't really do upgrades, or even if you do, you might have to pay for those upgrades in the long run by losing a security deposit. And you don't get an added benefit to those upgrades except for while you're living there. When you do upgrades on the home that you're living in, not only do you get to enjoy them, but it could potentially lead to more money in the long run based off appreciation. And those upgrades, if they're done well and not some, poor DIY job. So make sure you do them well. And then lastly, there's investment. Perhaps after you buy your first home, you don't want to sell it to purchase on the property. Perhaps you want to hold on to it and use it as a rental property, which can bring in income. Or perhaps you've made a lot of equity and appreciation and you want to sell that property to step up. So again, it's going to be an investment for you no matter which road that you take. Let's talk about getting started. When you're getting ready to purchase a home, these are the 4 steps that you want to do. Number one, you want to build your team. It's really important that you have a good real estate agent and a good lender by your side to lead you through. You really need those 2 people helping you through the process, and hopefully we can be those people for you. If not, we do have a lot of resources throughout the United States to be able to connect you, and the world, honestly, to connect you with agents and lenders that can help you on that process. Number two, you're going to want to understand your credit score. A lot of things go into the actual amount that you're paying in your mortgage, and one of that is your credit score. So you want to understand what that number is and how you can change it. And I wish we could say you don't need any money to purchase a home, but that's not true. You do need some money, not only to buy the home, but you're going to want some money saved when you do get those keys. So make sure that you're boosting your savings, know that what your budget is, and just understanding all of those numbers and how they tie together. It's really important. And again, that trusted team number one can help you do. So speaking of numbers, it's really important that you have what's called a pre-approval. So a pre-approval is basically really what it comes down to. It's a PDF saying, hey, you're good to go. You're pre-approved for this certain amount of funds from the bank. And it's tempting just to start looking, to go to open houses, to call your real estate agent friend and say, hey, I want to go see 123 Main Street. But without that pre-approval, it really can be detrimental to you. I like to compare it to going shopping on Black Friday, waking up at 5 a.m. and then not bringing any money or any credit cards. You're going to see a lot of great deals and you're going to miss out on everything. So you really need to understand what your budget is, how much money you can borrow from the bank, and how much do you feel comfortable borrowing? The bank may say, hey, we'll give you $1 million. And you're like, whoa, I only want to spend, 650,000. So it's really important that you understand those numbers and that you have that letter and you understand what it means. So speaking of that letter, I'm going to turn it over to Kirk and he's going to explain more about that process and how you get that magic PDF.
Thank you. And also on the pre-approval, it helps the seller to take you more seriously because you've already been vetted, you've already looked at the numbers, you know what you've been pre-approved for, and that they accept that you have the ability to follow through and close on purchasing the home. So we need some information in order to do that. And one difference between a lot of people talk about a pre-approval and talk about being pre-qualified. And the difference is pre-qualified is kind of like an estimate of, you having a conversation, just saying, yeah, I think that you have everything that you can that you need to do this. And a pre-approval is actually gathering the documents, going through and checking everything and verifying everything so that we know that we will have a complete and strong application and that you will be able to follow through when the time comes when you want to buy the house. So we need some documentation in order to do that. Driver's license, your identification, social security card. We're going to need verification of employment. So your at least last 30 days of paychecks, 2 years of W-2s. If you are self-employed, we can use tax returns. We also have a lot of programs that are specific to self-employed that we can talk about later. And if you have questions, please contact me because we can help you with that as well. Proof of additional income if you have another job on the side, or if you have something else, rental income or something that is coming in, that we can add that to help you qualify. Child support, alimony, anything else that is coming in that we can document, we can use as income to help you qualify. And then bank statements, of course, or retirement statements to use as your liquidity to show them that you have the ability to make the down payment and pay for closing costs and things like that. And so basically, everything that the bank or lender looks for is all about talking about trust and talking about risk. So what they're doing is going through, and this credit score goes right into that. So it's your ability to pay back the loan. And if you were going to lend somebody several $100,000, you'd probably want them to have a plan on how they're going to pay you back. So the FICO, your credit score, is a way to gauge that. It's your credit history. It's one of the ways that a lender will gauge how much that you can borrow. And it's built on many different things. I'm sure a lot of you know that there are free services that you can go to monitor your credit. You can get a free credit score from all the 3 major bureaus every year and keep track of that. And you just want to make sure that you don't have any missed payments, that you don't have any collections, things that are on there. If you have older accounts, please don't close them down because one of the things they look at is the length of your credit history. So that credit card that you got in college that you're not really using very much, just hold on to it because it's helping you in that little way. But credit score definitely plays a big role in this, and we can help you with questions on that as well. Terrific. Types of loans. So for first-time buyers, there's three main types of loans, and I'm going to start on the right side here. VA is for our veterans, and if we have any in this call, thank you very much for your service. This is a special program just for you that has some really amazing and powerful features. Zero down payment is one of them. There's a lot of exceptions made and special features of this loan. So if you are a veteran and have those benefits, please reach out. Love to answer any questions for you. It's a really fantastic opportunity. Hop to the other side, FHA. It is a fantastic program, government-backed loan. You can get as low as 3.5% down. They are flexible, and they're a little bit more flexible than a conventional loan as far as credit. Private mortgage insurance. If you have 10% down or more, then that can go away in 11 years. Otherwise, that stays until you refinance or sell the home. That FHA can go low. I mean, some programs go as low as 500 credit score, but the base normally is around 580. And it's a fantastic opportunity to get your first home. There's also down payment assistance programs that link into that and conventional loans. Conventional is a little bit more strict as far as qualifications. So you'll notice that the minimum FICO is 620. The mortgage insurance will cancel out at about 20% equity. So when you pay off at least 20% of the amount of the original purchase on the home, then that will be waived. You can do 3 to 5% down on these loans, and it can be fixed or adjustable. This is also available with down payment assistance, which is a fantastic opportunity as well. This is just a little bit about me and my company that I work for. I work for Nexa Mortgage. We're the largest broker in the United States. We work with over 270 lenders, investors, private lenders, and we have over 3,200 loan officers. We all share information. We have negotiating power. A lot of people don't know, but with mortgage brokers, they can negotiate lower rates with their investors, and it benefits you. So we do residential and commercial lending. We have all the specialties. So if there's a specific program you're interested in, please ask me. I would love to help. And we do business lending as well. Fantastic. So we've mentioned down payment assistance a couple of times in this call. There's regional and national programs for down payment assistance. So if you're interested in more information, please reach out. We can go over local programs with you. For all of California, Cal HFA is a huge program, and it's linked in with the FHA program. One of the things that they do is it works with both conventional and with FHA. So depending on what your down payment is, 3.5 or 3% of that loan, you can get what they call a silent second. So it's a loan for your down payment that is simple interest. It's only 1%. There's no monthly payments on that. You don't have to worry about repaying that until you either refinance or sell the home. And it does not compound interest. So the interest doesn't charge interest. That's what simple interest means. So it's a very affordable way to finance that down payment and get in and start building that equity in your property and have that opportunity.
Okay, I'm going to talk about our 10 rules. So a lot of these go in line with financing. It's pretty important that you keep once you get that magic PDF from Kirk, you want to do a few things so that you don't lose that magic PDF. It's important. So number one, you want to proceed with caution when you change jobs, become self-employed, or quit your job. That just means when you applied for this loan, you said that I work at the VA hospital. I've been working there for 10 years. And then all of a sudden you decide to go become or open a dog walking business. The bank is going to look at that and say, we gave you this money based off your history with the hospital, and now you're a dog walker. So just speak to your lender before you do anything like that. And of course, if something happens out of your control, be sure to call your lender right away so that we can decide how to move forward. Don't buy a new car. This happens a lot. You think you have your money planned out. You realize that you're getting more than you thought. So now's the time to go buy that new car. Just wait. You can still get the new car, but just wait to make sure that you can do that and not mess up that magic PDF. So do that when you're done. Don't use your credit cards excessively or let your accounts fall behind. A lot of this seems very straightforward, right? So be sure to keep doing what you're doing. That's really going to be the the thought process behind all of these one through 10 is keep doing what you're doing. Don't change anything. If you're already using your credit cards, you're putting $10,000 a month, you're paying it off. That's great. Don't change that, especially falling behind. You're going to need a little bit of extra money set aside for closing. Make sure that you don't spend that money. It's really important that, again, keep what you have the same way from the beginning to the end. Don't omit debts or liabilities. Now, this is one that actually happens more than often. I'm sure Kirk could back me up on that. You're
Yes.
embarrassed about that card that you opened up and let go crazy, 15 years ago, or you forgot to return one of those boxes from Time Warner Cable, 15 years ago, and it's on your credit report. Just be honest. It's like going to the doctor. You have to tell them what's really going on so that they can help you get to the closing table. You don't need to be embarrassed. Just be honest. That's more important. You'll be more embarrassed when you're midway through escrow and can't close on that home, right? And you've already given your 30-day notice. So that's important. Number 6, don't buy furniture or appliances until you own your home. This is so important. And I know it's hard because you see the house, you're so excited. I'm gonna get this couch and this refrigerator and the stove. But again, they're gonna run your numbers throughout the process. So don't mess that up. Don't just wait. And David's got a really great story. If we go out showing houses, we'll tell you the story about someone who did that and ended up having to wait an extra 30 days and return all the furniture. And it was a nightmare. Don't apply for any new lines of credit. You go and you get this magic PDF and you realize your score was better than it was, and your sister's like, "Hey, I'm trying to get a new car. Will you co-sign? You told me about your great credit score." Don't do that. And if your sister on the flip side said, "Hey, I just won the lottery. I'd love to give you $100,000 to help you buy this house." That's great, but talk to your lender first. That needs to be done a specific way with a gift letter. Don't just put that money into your account, because again, it can mess up things towards the end. Don't change or add bank accounts. And again, don't co-sign a loan for anyone without any reason. So I think it's been made pretty clear here, right? Whatever financial situation you apply with, make sure you maintain that until you have those keys in your hand, not a day before. Keep it the same.
All those things after closing. So
Yeah.
important.
All right. Any questions so far? We still have another half of this call. We're going to go over a lot of stuff, so most of them we'll probably answer along the way. But if you have a burning question, maybe on something we just talked about, then you can unmute yourself or throw it in the chat. I did have one person that threw in the chat. They asked about crypto. So this is more of a Kirk thing. Kirk, could someone use cryptocurrency to purchase a home?
Yes, they can. Actually, there are specific programs that allow you to use Bitcoin to purchase homes, and you can reach out to me and we can dig into that program and how that works. I'd be glad to help you with that.
Perfect. All right. So that's an option now. That's good. All right. Well, if there's no other questions, we'll keep going and we're going to have a spot at the end where we can also ask some fun questions. All right. So a little bit about today's market. So I just took a screenshot. This is the last 30-year screenshot. So you can see the market goes up and down. This as far as rates go. That's something people always ask. And like, oh, David, I'm going to wait till we call it the pandemic interest rates. I'm going to wait till it goes back down to, 3%. Okay, that's great. That's nothing wrong with that, but you might be waiting a long time for that. Who knows? Maybe next year it'll drop down to 3. I highly doubt it, but maybe I'm wrong. And then in that case, you could always refinance too. But most likely the rates are going to stay a little bit more elevated. But aside from interest rates, I do want to point out that there are more houses available now. I know a few years ago, especially during the pandemic, there was just not much inventory out there and prices were getting kind of crazy. Right now, it's a little bit more normal. We don't have like this huge inventory problem. We're more normal now. But the good thing is we have options now. Kimberly could tell you, Kirk could tell you years ago we didn't have many options. So now we have single family condos available. There's also townhomes. And then one thing I do want to point out is there are people that are getting back on the market now. So the rates have dropped a little bit. I know what was a month ago they were over 7% and they were hovering around that for a long time. But there are those buyers that are like, okay, David, I wanted to wait till 3%. I'll take a half a point drop. Perfect. So people are coming back out there. So just know that there's a little bit more competition now, but it's not one of those bidding war situations where we're getting 30 offers on a home, which was crazy for everyone. I do also want to point out the homes are on the market a little bit longer. So just if you see something and you, hey, the house has been on the market for 30 days, oh, the market's going to crash soon. Like, I don't think that's happening anytime in the near future. That's more of a normal system. If it's been on the market for 30, 45 days, 60 days, like that's really more normal. When we had it down to houses were on the market for like 40 seconds, yeah, I'm kind of kidding, but the houses were on the market for some cases 1 or 2 days and they were off with 30 offers. That it's not quite like that anymore. Now they're more normal. It might be on the market a little longer. And also a great opportunity to get a deal too. I put in here the price is a little bit more negotiable now. So yes, the price might be listed here. It's been on the market for 30 days. Hey, maybe we could try to get a lower price and get you locked in for that. Or get the seller to pay down the rate so you don't have to deal with 6.52%. We can have the seller pay down so that you're at a 5% or even a 4%. So there's ways we can deal with that. There's also a lot of grant programs out there that weren't around a few years ago. Some of these programs are kind of popping up. A lot of them are city specific. I know Long Beach just had one that just ended, but they had a great program where you'd get $20,000. So there's some stuff out there. And one thing I always like to say is the best time to buy is when you're ready. You know, Kirk, Kimberly, and I, we're not going to come out there and say, oh, you got to buy today or else you're never going to have a chance at home ownership. That's not the case. There's going to be other options out there. If now is a good time, then great. This might be the perfect time for you. But if it might be in, 6 months, a year, 5 years, just know that we're going to be around and we're happy to help you at that point too. All
Okay.
right. And
Yeah,
then Kimberly, you
speaking
can
of
jump into this.
Yeah, speaking of when you're ready, a lot of people ask, well, how do I know when I'm ready? That's a really good question. So, a lot of it comes down to finances and how much you're going to need. And these are a few things that are going to come up along the way. One is down payment. There's a big myth out there that you have to have 20% down to purchase a home. And it can help when you have 20%, pardon me, but it's not necessary. You can avoid something called PMI if you have 20% down or more, but you can come in to purchase a home with 3.5% down, depending on the program that you're using with your lender. So I think most of what we see is between 5 and 10% down. So again, you will need some money saved, but you may not need as much as you think. You're going to have to pay for a few things that you might not have thought about: inspection, appraisal, and closing costs. Number one is the inspection. We're going to help you find, or if you already have one in your back pocket, a general inspector who's going to come in and look at the house from the roof to the beneath the house and let you know what they think is a problem now and what may be a problem in the future. And we can use that inspection report to either decide to walk away from the home or to ask the seller for repairs or to make a checklist of things that you're going to fix as soon as you move in, or a combination of all three. And then you might need to pay for an appraisal. If you are buying a house in cash, congratulations. That's huge. You won't need an appraisal, but most of us do need a home loan. So the bank is going to make sure that if they're loaning you $800,000, that the home is actually worth $800,000. So they're going to have an appraiser come out. And unfortunately, that's something that you're going to have to pay for unless, right, you're using our program. So that appraisal might be $500 to $700. And then you're looking at closing costs. And a lot of people are really surprised by closing costs. There's one of those sneaky things that you don't realize is going to happen. But when you think about a real estate transaction, there's just three of us here right now in the beginning, but there can be up to 100 people working in different aspects of the transaction, and they're all working for a living just like you do. So, there are fees that have to get paid and people that have to get paid. And so all of that combined ends up being around 2.5% of the purchase price of the home. So all of those things you're going to need to plan for. And then this is something that's really been in the news a lot last year, and people are still a little confused about as to whether or not they pay their realtor. So we always like to ask, do you know how we get paid? And a lot of people are like, yeah, you commission, or the seller pays you, or I don't know. Well, a few things about when we're working for you as a buyer's agent. It's a little different if we're helping you sell a house, but we're not salaried. We're not paid by the hour. We're not reimbursed for our expenses. We're independent contractors. We're business owners, and we're only paid per job. So we're not paid hourly like a lot of people are. We only get compensation at the end of your purchase. So if you don't purchase, we don't get paid. So if we drive around for 6 months, we look at 100 different houses, we write 15 offers, we get in a contract twice, and then you end up moving to Texas, then we aren't paid for any of that time, any of those days, any of that time. So one way that we move forward with you is we have you sign a buyer broker agreement that just says, hey, you're going to agree to work with us. And if we get to the closing table, that compensation will be paid at the end through escrow. So you might have heard a little bit about realtor pay and commission and compensation, all of those things. Last year, there was a big change in August of 2024. So we just want to go over some of that if maybe you've purchased a long time ago or you're a little confused about what that means. Basically, because since the key changes are a couple things that have to happen. Number one, you have to have a written agreement with your agent before you start touring homes that clearly goes over the services they're going to provide, how long, and for how much. And those compensation terms are going to be very precise. It's going to say how they're calculated, whether it's percentage, whether it's a flat fee. And the agent's fee is negotiable. And what that means is it's basically just set by each real estate professional. There's not a standard. Just like if you were to hire a dog walker, there isn't a standard that's nationwide that it's always $25 an hour, right? Different dog walkers charge different amounts. Same thing with real estate agents. We're allowed to set our own compensation. So you have the right, just like with a dog walker, to shop around and find someone that works for you. One thing that's really important though is whatever we set in that contract, that fee can't go up. It can go down, but it can't go up. A lot of people get confused about, well, before we tour homes, does that mean open houses? Does that mean when we're on FaceTime? If I live in South Dakota, does that mean in person? So if we're on FaceTime, Zoom, in person, yes, we do have to have that written contract. However, if you're just popping into an open house when you're walking the dog in the neighborhood, you don't need a contract to walk into an open house, just when you're actually seeing a property with an agent. And again, when it comes to what we're paid, typically in the past, the seller would pay that. So the agent that says, "Hey, Mr. Joe, I'm gonna sell your house. I'm gonna charge X amount of dollars, and we're gonna give half to the buyer's agent, and I'm gonna take half." That's still pretty much the way things are going. We really haven't seen a lot of change. But the only thing that's changed is that agent says, "Hey, Mr. Joe, I'm gonna sell your house. I'm gonna charge X amount." And the buyer's agent, they're going to tell you what amount they would like you to pay, and then we can negotiate from there. So our job is, of course, to negotiate that with you and help you get some other things negotiated, like potentially those closing costs, those repairs that we talked about earlier. Those are things that we're going to try to get down for you and get to a spot where everyone's happy, the seller's happy, you're happy, and we can get to the closing table. This is really important, and I'm really glad this slide is in here because buying a new build can be a little tricky when you're trying to use your trusted real estate agent. In California, there's not a lot of new builds, but they are out there depending on what neighborhood and area you're looking at. You might come across some new builds, and maybe you're driving down the road and you say, "Oh, Palmer Homes, let's pop in and take a look." And I don't want to call David, I don't want to bother him, let's just go in. And they come out and they say, "Hey, just sign right here and we'll show you model A." Well, if you sign right there, then unfortunately David won't be able to help you. So it's really, really important that when you're seeing a new build that you go for that first time with your agent, because otherwise that piece of paper that you signed when you were so excited to go see Model A says that David isn't allowed to help you, that Palmer Homes is going to be helping you. And that might be beneficial for some, but honestly, it's like getting a divorce and having a lawyer represent both sides. It's not gonna work out well for someone. The attorney's gonna get paid very well, but someone's gonna get the short end of the stick. So remember, it's really important to have your agent with you, because even though it's a new build, it's brand new, there still might be a lot of problems. I know David's worked with some new builds where there was just a lot of problems. They're done very quickly. They're done cookie cutter. So you want to make sure that someone's representing you and that we can do the walkthrough and point out anything. We can get the inspector in and make sure that everything's working the way it should. So call us first before you go look at model A, B, or C.
Perfect. And yes, I have a lot of stories having to do with that. And even though it's a new build, you think it'd be perfect, but it's not always like that. But we want to make sure that it is perfect when you get it. So all those little things that maybe they didn't disconnect or connect correctly, we make sure they do all that. And there's a lot of negotiating that can happen. You might see a price that's up on the billboard or whatever. Know that that's all negotiable, and sometimes they have agreements where they can't lower the price, but there's other things they can do that we can negotiate for you. Like I had one recently where I got the seller to pay, it was I think $18,000 to pay off the solar. It was a brand new solar, and but they wanted you to take over that, and I said, "No, we're not doing that." We ended up getting the $18,000. We got the seller to pay for that. So that was a way where I mean, I paid for myself right there, and the client was really happy about it. So, yeah, so make sure you bring us with you for new builds. All right, we have the house hunting checklist. One thing I like to always say is scout out the neighborhood in person, and you want to check it out during the day, middle of the day, morning, night, whatever. Really, times where you might be outside, I think that's important too. If you're going to walk your dog every morning at 5 in the morning, how do you like walking around at 5 in the morning? Or if you walk the dog every time at 11 o'clock at night, that's their schedule, then you got to make sure, do you feel comfortable with that? Or parking. Say you're in an area where parking's impacted and you don't have a parking spot in your condo, then you might want to pay attention to that. If you have to drive around for an hour and a half to find parking, that's something you'd be aware of. But if you come back from work at a time where the parking is available, then great. So just a couple things to keep an eye out for. You also want to consider nearby freeway shopping activities that you might do, any community amenities. You just get a good feeling for the neighborhood. Again, you want to drive around. I like Google Maps for something like that. You could just look at a kind of overview of the area, get a feel for things. You want to make sure you pay attention to your senses. So you want to listen, smell, use your eyes, that kind of stuff. For example, on noise, cars, airplanes. If you're in Long Beach, I know we have a couple Long Beach people on the call. I've just sold a house where the plane lands, and they were literally, the house was no joke right above them. Or I'm sorry, the plane was right above them every time a plane landed. They were perfectly fine with that. They're like, "Hey, we got a crazy kid that's screaming all the time, and we're not even going to notice." And they're very happy so far. But they also got a good deal because of that. But we also have, cars, like if it is by a freeway, or a busy street, know that you're probably going to hear that motorcycle revving their engine going by. You're probably going to hear that forever. So just be aware of that. Another big one where I always point out is if you're by a school. I sold a house to a friend and I told him, "Hey, Marcus is his name. Sorry, Marcus. Hey, you're by a school. Just be aware. It's summer right now. You don't hear the kids screaming, but they're probably going to be screaming during the school year." He moved in, school year started, and you hear this high-pitched scream of kids all the time or during recess and after school. He's okay with it, but he could be a little happier maybe if he wasn't by the school, but we'll warn you on that kind of stuff. Also the smell. I've shown houses and I used to live over in Chino, Ontario area, and there's cows over there, and the cows have they have a pungent smell, and some people like it, some don't. If you don't like it, then just be aware those cows are probably not going anywhere. Another one you want to pay attention to is utilities. If you're in an area, typically we don't sell in our area, LA and OC area, we're not selling something without electricity or sewer. But I have a listing right now in Ventura that's septic. And just something to be aware of. Septic is just, it doesn't go out to the sewer line to the city where they deal with it. It just stays underneath your house and you get to deal with it that way. I don't think it's horrible, but you got to just be aware of that because that's an upcoming expense that you might have to pay for. And then also, if it's part of an HOA or the homeowners association, you do want to be aware of that because usually there's some extra expenses that go along with that, and then some other rules that you might want to be aware of. All right, there's a lot of different providers. If you need anyone, know that I know we say, oh, get an inspector, get a, home warranty, all that kind of stuff, get a mortgage person like Kirk. Yes, we know all of those people. So if you have anyone, you don't need to go on Yelp and find out that. You can if you have someone, but no, we have a full list of all of these people here, which we're happy to share with you. All right, this is my favorite slide. This is the journey to home ownership. So this is where we're going to talk about the process from start to finish. I'll try not to talk too much on this one because this is an exciting slide for me because it's really from today until the point where we get to hand you the keys. So first thing you want to do is build your team. You have us, you have Kimberly, myself, and Kirk. Perfect, we can check that off. You want to obtain a pre-approval, so you want to connect with a great lender like Kirk to get a pre-approval going. So like Kimberly said, you know how much you actually qualify for. And then you want to talk to Kimberly and myself, and we can get an agreement going so that we can legally go see houses and start that house hunting, which is always fun. Let's say we go out a couple weekends, maybe the first weekend, and we find the home that you love. Then we would walk you through that. There's a long contract that we'll walk through with you. We will negotiate that for you. We make an offer. Perfect. We go back and forth. Sometimes if it's multiple offers, there might be a counter offer, a back and forth. We try to write the offer where we get it accepted right out of the gate. That's our goal. But we have that. So let's just say we get it accepted. That star's there for a happy day. So we get our offer accepted. Great. Now they're legally bound to you, which means that they can't go and jump. If someone offers $1 million more, they can't jump to you to that other person. They're kind of stuck with us. So that's where we do a little bit more negotiating in most situations. But from there, you want to wire your earnest money deposit, and that's typically between 1 and 3%. I recommend 3% because it shows that we're a little bit stronger of an offer. And this is part of your normal down payment. So say you're going to put 5% down, you're putting 3% up front. That just means by the close of escrow, you're going to have to come up with the additional 2% for your deposit. So your earnest money deposit, that's just showing that you're a serious buyer, and that money goes directly into escrow. And escrow is a neutral third party. They're going to hold your money in the bank account. And then at the end of the transaction, that's when they divvy out the money and all that fun stuff happens. They're a neutral third party, so they're not on the seller's side, your side. They're really just in the middle, and they're making sure we all follow the contract that we all agreed on. But you, with that 3%, if something happens, you don't just automatically lose it. You do have three main contingencies that I'll talk about: your inspection, your appraisal, and your loan contingency. The best one is our inspection contingency, where we are going to go in the property and we're going to have that inspector come out, and they're going to look at things, and they're going to find something wrong with it. Every single home you will find something wrong with it. If they don't, then that means that's a bad inspector. I would say let's find another one, because they're always going to find something wrong with it. Sometimes it's big things, sometimes small, but all things that we can deal with. For example, it's hot right now. It's very hot, so you want to have maybe your AC that works. So that's the first thing I'll have them check right when they get in. Let's pop on that AC so that we're not sweating all day, but we get them to check that out. Let's say that's one thing they find out that doesn't work. Maybe it's they run it all day, it doesn't get cold, there's a problem. Okay, then what I'll do is I'll get an AC person to come out, and they're going to provide a quote. They're going to come out and say, we have an expert that says doesn't work. It's going to be $12,000 to replace the AC. Then we're going to go to the table. Kimberly and I have that fun conversation with the seller and say, you know what, we wrote this offer for $500,000, and it's a great house. They still love it, but the AC doesn't work. We're going to need $12,000 credit to pay for the AC. We wrote our offer because we wrote it for this amount because we assumed it had an AC. Currently, it doesn't have AC, is how we see it. So we want you to drop the price or give us a credit, and we'll deal with it later. That's typically how we'll do it, is we'll just get a credit. And then a lot of times they'll just accept because they want to close escrow. Perfect. Let's do that. So then now you have $12,000. Do it after the close of escrow. Or if it happens to be in winter, like just do it when it starts to get hot later, and you could fix it later. It also could be that they say, oh, we'll meet you in the middle. Sure, you pay 6,000, we'll pay 6,000. Great. You could decide if that works for you. Or they could say, you know what, kick rocks. We got 5 other offers. Sorry, take it or leave it. And then at that situation, it's up to you. If you want to move forward, then you could still do it. And if not, you could back out and you get your full earnest money deposit back. But no, in California, all homes are as is. So technically, they don't, if you ask for $1, they don't have to give you that. That's really up to them. Kimberly and I are really good at getting credits for that kind of thing, but know that they don't have to. All right, so let's just say they agree to that. They're going to say, you know what, here's $12,000 for the new AC. Great. Perfect. We'll remove that contingency. Next one is going to be the appraisal. So that's going to be in place so that we have to find out how much the home is worth. So we wrote that offer for $500,000. The lender is going to require an appraisal because they want to know how much the home is worth. We offered $500,000. It appraises at $510,000. That's a great day. That means you already have $10,000 in equity as soon as you get the keys. So that's a good thing. It could appraise, and that doesn't mean you have to pay more either. That just means that you have some equity. It also could appraise at value. It appraises at $500,000. Great. That's a happy day. You're going to get a loan for the full amount you need. It also could appraise under that amount. Say it appraises at $490,000. This is not that common, but it could appraise under, and you have the option there where we try to get the seller to pay for it. Obviously, we say, you know what, we offered at $500,000. It's not worth that much. It's only worth $490,000. We need you to drop the price to $490,000. A lot of times we can get that to happen, or we can meet somewhere in the middle. But remember, they don't have to do that. But let's just say they say, you know what, fine, we'll drop the price to $490,000. Great. Then we can move forward and remove that contingency. You can also use that as a way out in case they don't drop the price. But typically it appraises at value. That's the most common. The last one's going to be your loan contingency. This is going to be in place. It defaults to 17 days. but this is going to be in place just until you get the loan funded and ready to go. We want to have Kirk really dig through everything. That's why you want to be transparent with any expenses and debt you have, because we want to be able to, we want Kirk to be confident saying, yes, we're good to go. We can close on this loan. Typically that's a good way out in case I've had it happen where someone loses a job in the middle of escrow. Things happen. I've had it happen where that was a way out where we could have backed out. Luckily, my scenario where we had it as a way out, we would have got our full earnest money deposit back. They lost their job in the middle of escrow, but luckily she was a nurse and she could just get a job as another nurse. She wouldn't switch to a different career. That would not be good, but she got a job as another nurse and she had a letter saying she was hired, and that was something that was good enough for the lender, and we were able to close. So you have those three contingencies in place just to make sure that your earnest money deposit's safe. And let's just say we remove all those contingencies. Now your earnest money deposit could be at risk. So these last 7 days, really pay attention to those things that Kimberly was talking about earlier when you're in the middle of escrow. All right, so now we're almost there. We would remove all those contingencies right here. Shortly after that, you're going to sign your loan docs. You're going to wire the rest of your earnest money deposit. Let's say it's that 2% in addition. So now you're at 5%. And then shortly after that, then we get the fun job of handing you the keys to your home. And we get to take that picture with the sold sign if you want. And that's always a fun day. All right, so that was a big one. And just remember that this is a big, I know this might be have steam come out of your ears, very common, but just know that we deal with this stuff every day and we walk you through the process as we go. So you don't have to remember any of this. We like to talk about it all this way just so when we get to that point, you'll be like, okay, I remember Kimberly was talking about something like this. Oh, David said this. I kind of give you a lay of the land, but we'll walk you through every step as we go. All right. And then just know that if you go online, feel free to do it now if you'd like. If you go on Google or Zillow or Realtor, any of these sites, just Google David Sanchez Realtor, Kimberly Smith Realtor. You'll see a lot of different reviews on us. These are just a quick snapshot of this is one from Michelle, and then Kimberly has one down there, but you can see a lot of fun reviews from us. But I want to point out this house behind them. This was a great one where they didn't have to pay any closing costs because even though it was a flip, they did a pretty good job with it. But we were able to find some things underneath the house that were, some corners were cut, so we were able to get a big credit for really a minor thing that I made sure it seemed like a big deal, and they didn't have to pay any closing costs. So inspections are important. Just one more example on that. And then we always like to say, keep learning. You guys took the first step by being on the call today, which is great. Right here is the first time homebuyer seminar. That's what we just went over. We also do a lot of other ones. One of my favorites is this tax benefits for homeowners. I have a CPA that I've actually sold a house to on the call, and he goes over some of the benefits, and which is one reason why he bought a house, which is a really good one. We're not in a bidding war situation right now, but that's one of my favorite calls because Kimberly and I love to negotiate stuff. And then we also have inspectors on every once in a while that kind of go over some people, especially a type A personality, they want to know exactly what's going to happen along the way. So we'll get someone out for that. So you could scan that QR code or just let us know. All right, and we're going to have a Q&A in just a second, but real quick, before anyone jumps off, I just want to say thank you all for joining the call today. I know you're all just getting started now, you might not follow us on Instagram. I put all of our Instagram handles on here, so you could take your phone, if you're not the most tech savvy, you could take your phone, go to the camera function, and then just scan over the QR code, and then that's going to pop up our Instagram, and you can see, we just listed a couple homes recently. You can see what we have available, and then we also have a lot of educational stuff, and you can learn a little bit about us. Yes, we love selling real estate, but we also are real people, and we like our community too. So you'll see that'll be pretty clear when you go in there. So take a screenshot of this page too. Again, we got my phone numbers on there. And then thank you again for joining the call. And Kimberly, if you want to say a couple things.
I just want to say thank you again for joining. I hope it was informative. The whole process, we're constantly teaching you and going over things every step of the way. So it's not like we say, here's all the information, then we never go over it again. It is a consistent learning process from step A to Z. So just be aware that we're going to continue to educate you throughout the entire process.
I did see that there was a question in the chat.
Oh
Really
yeah, let's jump
quickly.
into it now. Perfect.
So somebody asked, they haven't got a pre-approval yet, and they just got a new credit card, and how is that going to affect them? And that's a fantastic question. Kimberly went over this a little bit earlier in that, it's kind of the lender is always looking at risk, and anything that's new or change, they can view as risk. Adding a credit card, if you haven't put anything on that, shouldn't be a bad thing in the long run. As a matter of fact, in a couple of months, when it's been on your credit for a little bit of time, it may help you and raise your credit score because you have a larger available credit. But it's something that you can go over, and we can certainly monitor. But it's not going to be like Kimberly said, going out and buying a whole bunch of furniture, because that's going to change what is your debt to income ratio, which if you have any questions on, we can go over it, but it's one of the qualifications that you have to go through. And just being prepared is probably the greatest thing you can do. One of the best things about a pre-qualification is that it gives us time before you're going to make an offer to find out if there's any situations, any issues that we should address or try to fix before you do make an offer. And it gives us time to put you in the best possible situation before you want to make that move.
Great. Thanks for going into that, Kirk, and answering that question. Hopefully that answered your question. And then also, since you're talking, Kirk, another question that someone threw in the chat is Credit Karma. If they just pull up their credit score on Credit Karma, is that a good start?
That's a fantastic question. And I always tell people that if you do monitor your credit, then you're ahead of the game, because there aren't going to be surprises, or potentially aren't going to be surprises. The score that you are seeing on Credit Karma is a little bit different than the score that the mortgage industry uses. So there's going to be a little bit of a number difference, but the accounts that are listed on there, if there are any late payments or if there's anything that needs to be addressed, normally it will be in like Credit Karma. You will see it from one of the three majors, and it's something that we can address. So yeah, if you have a Credit Karma account and go through that, that's fantastic. It's a great way to start.
Great. All right. And then you want to say a quick exit? We got a couple more slides and then we'll be wrapping up. But Kirk, one more if you want to say one more thing, and I know you got your Instagram on there too.
Sure. Well, thank you everybody for coming. I really appreciate being here as well. My name is Kirk Salen. My number's on the screen. If you have any questions, please reach out. You can text. That's the right number to text me. You can call me. Everybody is individual, so every program that we put together is specific to your needs and to your situation. And I'd be glad to talk to you about how to put that together for you. Thanks for being here today.
Perfect. All right. And then this is the one thing I know we wanted to talk about one more time. So remember, if you guys, anyone on the call today, you want to lock in some of these perks, because it really is a good one that we just started offering, and it's really just for people on the call today. So if you have your phone with you, I know we we learned about it a second ago, how to scan with your camera. So go over the QR code, and then it's just asking a couple quick questions. And then if you have that in there, then hopefully you're ready right now. That'd be great. But if it's in 6 months or a year, 2 years from now, and you're like, hey, I was on that call with, you, Kimberly and Kirk, can I still get those perks? Like, yeah, we have your info, and it showed that you kind of locked in that. And then this will just show that you made it to the end of the call, which, not everyone makes it to the end. So I'm glad you made it to the end. So if you got a chance to do that, if not, then let me know, and then we can go into that. Another thing I always like to say, we always get people from different parts of the country on the call today, or on the call. So we have, if you're from another area, or anyone that's watching maybe this recording, if you're from another area, know that we know agents in a lot of different areas throughout the US. So let us know, and we could find someone that will help you if that's your case. And another thing we always like to say, because we've learned a lot of people go on this call just to steal our ideas, and they want to see what we're doing, because luckily we're successful. They want to kind of see what we're doing. So if there's anyone on that call that's like that, that's fine. Just let us know, and we're happy to kind of help with that. You don't need to steal our content. We'll share that with you, because we like what we do, and we believe in home ownership. All right. Well, thank you all for joining.